It's $175 today. Based upon the prices I looked in the company at, I mean, we're talking about 100x. 100x stock. In a matter of 5 years or so? I mean, my gosh. Damn. Life-changing. Life-changing. Maybe there's a potential that analysts are too low with their estimates, and maybe Celsius will come in and beat that. And maybe it's not really a 62 forward P. Maybe it's a 52. Maybe it's a 40. Maybe it's a 30, right? As I told you guys, there's only one EV stock. If you force me to buy outside of Tesla, only one I would do. And it's what a move. What a flip and flapjack and move. So, well, howdy there, folks. Welcome in. Oh, we got a fun one here today, folks. We got a fun one here today. I gotta send back on because Cam's on there talking right now. Thanks so much for being here, folks. I do appreciate y'all. We got a busy day. A lot to get into here today. Big move down in oil here today. We're going to speak about, obviously, a ton of stocks to speak about. Earnings. We got some big movers after hours for earnings, folks. Oh, man, it's going to be a drama show after hours today. I can tell you that much. For the person in the chat that said they're just getting into stocks, like what to do, how to do it, all that sort of stuff, you know, go on YouTube onto my main channel, Financial Education. Check out some of my, and sort my videos most popular. My most popular videos ever were videos around stock market for beginners. I have a great video I did in 2019, stock market for beginners. A really good one I did in 2020, stock market for beginners. And one I did in 2018. Those will help you out tremendously. All right, folks. So before we get into what's going on here in the markets here today, in my opinions and a lot of things, okay? First off, we're going to have to check out Oobity Boo Boo earnings at some point in this live stream. Celsius, it's going to be a busy video, man. I want to see Celsius earnings. Datadog's up like 27 flip and flapjack in percent. Look at this. Look at this. 28% Datadog's up. Holy smokers, that's no flip and flapjack and jokers. Like, my gosh. So we got to see what they reported. D.R. Horton, I want to hear what they had to say as far as commentary. After the bell, we have Rivian. We also have Lucid reporting after the bell here today. So when I say we got stocks that are going to make some moves after hours, we got some movers, up and down movers, okay? But when you're talking about stocks like Rivian and Lucid, huge movers. Upstart's a huge mover usually. Axon could be a huge mover. We'll see. Toast, usually a huge mover. Dutch Bros, I wouldn't call it a huge mover, but that should be an interesting earnings coming after the bell. If we see U.S. markets here, so Russell Wilson, if I recall, is down today. Yeah, the Russell Wilson is down today. And this is really intriguing because my two best stocks are Avant Brands and Revolve, so very surprising. Very surprising. And Honest is my fifth best stock today. Very surprising. Plan is my sixth, and then Fubo is my seventh. That is surprising. I got to say that. Very surprised, considering the Russell's down today. Like, I do wonder, what if the Russell was green here today? My worst stock here today is Foot Locker, down 2.3%. My second worst stock is Wynn, down 2%, and JWN, down about 1.7 percentage points there. And then we just got a bunch of kind of mixed bags in the middle there. Let's go ahead and take a look at oil and gas. It is Red Dead Redemption out there for oil and gas stocks. Obviously, with the move in oil, not pretty. Not pretty for those stocks, right? Let's take a look at my travel watch list here today. As far as that watch list goes, Oobity Booba stock is the best one today. Airbnb's number 2 at about 2.5%. Wynn Resorts is the worst stock of my travel watch list there. And then the last one up here, semiconductors, is a bit of a mixed bag in regards to Skyworks Solutions' worst stock here today, down about 0.5%. Avago, Broadcom, up about 2 percentage points here today, okay? Okay, so we're going to have to start getting into a lot of earnings here.
New York Times columnist and CNBC contributor Jim Stewart, who literally wrote the book on the company.
Oh yeah, Disney earnings are tomorrow. Disney earnings.
Yeah, it's good to be with you.
All right, so if we assess where we are in this turnaround story, if you had to say the inning, what would you say?
Oh, I think maybe 6 or something. You know.
Sixth inning of the turnaround. That's interesting. Corsair's reporting as well today. Wow, I didn't even know Corsair was reporting. That's interesting.
Okay. At the moment,
we'll take a peek at them.
It was the writer strike, which finally settled, and the Screen Actors Guild, which is still not settled, and that has thrown a wrench into getting much predictability out of these current results.
What do you make of Hugh Johnson coming in as CFO? It's obviously not lost on anybody who's followed, you know, him and Nelson Peltz, who obviously is big in the stock, that he was at Pepsi. when Nelson had his thing with Indra Nooyi and Pepsi there. Is this a coincidence that he's at Disney?
There goes that Amazon Prime van. Okay, so Datadog, this stock's up like 27, 28% right now. Datadog reported adjusted earnings for the quarter of 45 cents, which beat average analyst expectations by 11%. That's a big beat for Datadog. Revenue came in at $547 million. That's up 25% year over year and topped analyst expectations by $23 million. For the fourth quarter, Datadog forecast revenue between 464 million and 468, so we can call it 564 to 568, so that we can call it 566 at the midpoint for Datadog, which is well above consensus of 543. I can see why the stock's up 20+%. The stock had been hit pretty hard over the last couple of years, and I mean, damn, you come in with that sort of beat on revenue and the beat on EPS and the beat on the guide. A GAAP net income per share is forecasted to be 43 cents at the midpoint. That's versus 34 cents was the expectation. So Datadog, damn, Datadog, you're a dog, but in a good way. Wow, that's impressive. Like, good on you, Datadog. Good on you. All right, now let's see Booba earnings. Okay, let's take a peek here. Okay, Uber. So Uber GAAP EPS of 10 cents that missed actually. Wow, it missed by 2 cents. Revenue was up 11.4% year over year, so that's okay. They missed by 250 mil. Gross bookings grew 21% year over year to $35.3 billion, or 20% on a constant currency basis, with mobility gross bookings of $17.9 billion, 31% growth year over year, 30% on a constant currency basis. In delivery, gross bookings came in at $16.1 billion. That's up about 18% year over year, 16% on a year over year constant currency basis. Outlook for Q4 2023, gross bookings expected to be, let's call it $37 billion at the midpoint, and adjusted EBITDA of $1.18 billion to $1.24 billion. So I will say I'm a little surprised to see Uber's up today. A little surprised. After those earnings, I would have thought maybe Uber would be down like 5% today or 7%, especially given the fact that that stock's up about 90% roughly this year. So I'm a little surprised on that one. Celsius Holdings. Celsius has been a hot stock for years. Wow, it's doing absolutely nothing. That's interesting. It is up 101% in the 1 year, so do keep that in mind. I mean, what a move. What a flip and flapjack and move. All right, Celsius. So Celsius. GAAP EPS of 89 cents. It beats by 38 cents. Revenue of $385 million beats by $33 million. Whoa. Good for you, Celsius. North American revenue was driven by expansion in total distribution points and higher SKUs per location. SKUs is just a fancy word of putting more items, okay? International revenue increased 56% to $13.6 million. So the good news for Celsius is they're a baby on the international markets. They have a long runway of growth. I would say probably still a lot of growth in the United States over time, but certainly the international opportunity for these drink companies is usually bigger than whatever it is in the domestic market. So that's something to kind of keep in mind there. That's pretty exciting for Celsius. For the third quarter of 2023, from $8.7 million from the prior year quarter, driven in large part by successful innovation launches, increased velocity, and brand awareness. Wow. Damn you, Celsius Holdings. Man, I remember way back here, like my brother-in-law was asking me about the Celsius Holdings. He was drinking the drink back then and was pretty aware of it. And I looked in the company and the financials are kind of crap. And I had been in Monster previously, which was a stock that treated me great. But I was like, I don't really want to compete against Monster. And what I failed to realize was Celsius was just competing differently. They weren't really going directly at Monster. They were grabbing a new clientele base, right? And Celsius back then was $3 or $4 a share, right? It's $175 today. $175. I just missed was NVIDIA back in the day. I taught one of my store managers at Quick Trip. I taught him, basically we spent a day together. I taught him everything, and I pretty much know about investing one-on-one, just, because I was trying to get people in the market back then. And so taught him everything, and he brought me 2 stocks back. One was Wendy's and one was NVIDIA. And this is back in 2014 and 2013 or 14. I think it was 2014, so about a decade ago. And you can see what Nvidia stock was back then, and you can see what it is today. I mean, it's just ridiculous. So those ones hurt when you look into a company and you're kind of like, I don't know, and you don't make a move, and then you see what it does over time. It's just like, oh. I mean, if Celsius goes to $300+, that was 100x. Think about that for a moment. Let that sink in. I shouldn't say if Celsius, when Celsius goes to $300+, which will probably happen eventually, right? Based upon the prices I looked in the company at, I mean, we're talking about 100x. 100x stock in a matter of 5 years or so. I mean, my gosh. Damn. Life-changing. If somebody only puts, $5,000, $10,000 into a stock like that, and they see the future, right? And they're like, I see how this company's going to keep expanding. I mean, it's a life changer, and that's the part of individual stocks that's pretty darn exciting, is when you can build a portfolio of 10, 20 stocks, you don't have it all riding on just one stock, and you're diversified, and then you find something like an Elf like I have, or a Tesla like I have, right? Or you find a company like a Celsius. Holy smokes, or an Nvidia, or one of those companies. The wave you can go on over a 5-10 year span is life changing. The only problem usually with Celsius is valuation, right? We take a peek here. So Celsius is supposedly trading at about 62 times next year's expected earnings, which is obviously pretty darn high. It's about 3x, or if not a little over 3x the market, right? But Celsius is growing at such a rapid clip, you could make a justification that maybe it deserves to be trading at 60-something, forward P. Also, you could say maybe that number, the analyst expectations, are too low, right? If Celsius is coming in killing earnings the way they are, maybe there's a potential that analysts are too low with their estimates, and maybe Celsius will come in and beat that. And maybe it's not really a 62 forward P. Maybe it's a 52. Maybe it's a 40. Maybe it's a 30, right? So I don't know. Those are just all things to kind of consider and think about in regards to that. Now, I don't think D.R. Horton's the best stock to understand what's going on in the real estate market. Like I said, because they sell so low end, they're the lowest end home builder of the bunch. So I feel like even in this higher interest rate environment, they'll be fine. I think there's a lot of the other home builders. Like, I have no interest in putting a short position or hedging against a D.R. Horton. Heck no. I don't want to hedge against D.R. Horton. Not when they sell the most affordable homes of any home builder, right? I mean, their average sales price is 300-ish usually, somewhere around there. For, the real estate market nowadays, 300 is very affordable, very affordable. And that's kind of around the price points they're selling at, right? So let's go ahead and take a peek here at D.R. Horton. And Plus usually trades at, we're trading about 8 times earnings. All right, D.R. Horton. Whoa! D.R. Horton GAAP EPS 445 beats by 52 cents. Revenue beat by almost $500 million. They beat revenue by $480 million. Whoa. Guidance, consolidated revenue is approximately 36 to 37 billion. Okay. Homes closed by home building operations, 86,000, 89,000. Okay. Where was the analyst community for revenues for next year, though? So D.R. Horton's at about, we can call it 36.5. Okay, 36.5. Where are analysts at with this one? Earnings estimates. So, fiscal year 24? So that would be about $300 million ahead of where analysts are at, right? Analysts are at 36.2. D.R. Horton's midpoint's 36.5. So about $300 million ahead of where analysts were expecting revenue to be this year. So that's good. Good. Good overall. I think that's what's important also with all these stocks. And once again, I do believe D.R. Horton's the best position. Of all the home builders, D.R. Horton's the best position. Backlog. Net sales orders for the fourth quarter ended September 30th, 2023 increased 39% to 18,939 homes and 34% in value, $7.3 billion. The company's cancellation rate, canceled sales orders divided by gross sales orders, for the fourth quarter of fiscal 2023 was 21% compared to 32% in the prior year quarter. Okay, that's good. So
Morgan Brennan, John Fort is off.
We're going to play our game here in just a moment. We got a big after hours here, folks. We're going to get ready for some freaking moves. Rivian, Lucid, eBay reports. I didn't even know they reported. Robinhood reports. We got Dutch Bros reporting. We have Toast reporting, Axon reporting, Upstart reporting. And there are going to be some freaking moves in this after hours, folks. So get ready to have your socks knocked off.
Celebrate the decline in yields, but I think
Bros moving up after hours so far.
Why yields are falling, like you just said, a lot of the reasons are not good for equity. So you have disappointing economic data. You have this morning export figures out of China, Taiwan, German industrial production. You've had weeks of pretty underwhelming earnings reports, including from some pretty important cyclical
Toast
companies.
is getting toasted so far, 8% down.
CNH Industrial, who you're going to talk to a little bit later in the hour. You had Air Products, so some big industrial companies. You're also seeing, on a more positive front, you know, disinflation.
Oh, Upstart. Upstart. 16% down so far. Oh, crap.
Where they were tweaking certain terms of their auction. So all those factors are contributing. But the biggest one, in my view,
Robinhood. Robinhood missed.
You know, I think a change in the growth trajectory.
Maybe I'm glad I didn't make that gamble.
And that is really giving a bit to equities. And so stocks for the time being are celebrating it, but eventually there's going to have to be a reckoning on what's happening with growth, and that's going to be, you know, more negative for stocks.
Okay. In the meantime, Rivian earnings are out. Philippo has.
Here we go, Rivian.
Hey, Morgan, these are better than expected numbers for the third quarter for Rivian and a change in their guidance. We'll get to the guidance in just a little bit. Smaller than expected loss in the third quarter of $1.19 a share. The street was expecting a loss of $1.32 a share. Revenue basically in line with expectations, maybe a hair better than expected at $1.337 billion. The numbers within the numbers in the third quarter, Rivian's free cash flow negative $1.06 billion. The loss per vehicle continues to...
Trading is gambling, by the way.
Quarter to $30,648. It was over $32,000 in the second quarter, more than $130,000
over $10 billion in liquidity.
Of last year. They end the third quarter with $10.25 billion in liquidity. And a couple of important notes. First of all, Rivian and Amazon jointly announcing that they are ending the exclusive arrangement with Rivian building electric delivery vehicles for Amazon.
What a disaster,
Amazon
Lucid
is an investor in Rivian. This will allow Rivian to continue delivering these vehicles to Amazon, but also to other commercial operators who may want
that's good for
one
Rivian.
of these vehicles in the future. And in terms of guidance, they are raising their 2023 production guidance to 54,000 vehicles from 52,000. They're cutting their EBITDA loss for the year to $4 billion, was $4.2 billion. Last quarter was the guidance. And their guidance in terms of CapEx, they're going to be spending $1.1 billion in 2023 as opposed to the previous guidance of $1.7 billion. Real quick, guys, don't forget RJ Scaringe,
that's a big cut by Rivian.
He's going to be talking with us tomorrow morning on Squawk Box. Lots to discuss. Again, better than expected numbers in Q3 from Rivian. Guys, back to you.
Yeah, better across the board, it sounds like.
As I told you guys, there's only one EV stock. If you force me to buy outside of Tesla, only one I would do, and it's Rivian. That's it.
An earnings loss as well this quarter thanks to the legal fine. Also saw a drop in monthly active users. Robinhood, the loss per share, that was 9 cents. We're not going to compare that with estimates. It's not a comparable number, but this comes after the company reported a profit last quarter. That was a surprise, but it's back in the red when it comes to earnings. For the third quarter revenue, that was shy of estimates, came in at $467 million. It was up 29% year over year. Robinhood's top line was fueled by higher rates that helped offset some of the slower trading activity the company has seen. Net interest revenue almost doubled year over year, up 96% to $251 million. Then transaction-based revenue, that's pretty much trading fees, was down 11% year over year. Options did make up the bulk of that part of the revenue line item, $124 million. Equities was down 13%. And then cryptocurrencies saw by far the steepest drop, down 55%. Bringing in about $23 million when it comes to revenue. Despite the drop in volume, Robinhood saying that it does plan to offer crypto trading across the EU. We have not heard that from them before. That's new. And then monthly active users. This was a miss, guys. 10.3 million. Street was looking for 10.8 million. I caught up with the CFO of Robinhood, Jason Warnick.
Not good.
He talked about that revenue miss. He said September trading volumes fell off quite a bit versus earlier in the quarter. He said that was really the difference on the revenue front. He did talk about higher rates helping offset that. And then on the MAU miss, monthly active users. He said they have seen less engagement on the platform. That could be explained by some of the lower trading activity, but it's not hitting other metrics. They saw more assets under custody, for example, and then the legal accrual. So this had been disclosed in a 10Q, guys. The company has been vague on the specifics. Warnick telling me that they're a fairly young company. He said we grew incredibly fast along the way. They had a number of issues come up where regulators have engaged with Robinhood. He said they've invested a ton in compliance and regulatory, but these are lagging issues, as he put it. He said they're at a point where the company can move on. That was disclosed, but it's hit the revenue number. But you can see down more than 4% here after hours. Morgan, back to you.
All right, Kate Rooney, thank you. 5% now. We've got another EV maker.
Good.
Those earnings to bring you. Lucid. Phil LeBeau has the numbers.
Oh, gosh, here we go.
Morgan, it's a loss of 28 cents a share for Lucid in the third quarter. Now, the street was expecting a loss of 35 cents, but it's unclear if this was gap to gap in terms of the comparison, in terms of what analysts were expecting versus what Lucid is reporting. So we'll leave it at 28 cents a share, a loss in the third quarter. Revenue light of expectations, 138 million. The street was expecting 184 million. Important change in guidance in two figures. First of all, 2023 production. The previous guidance was 10,000 vehicles. Lucid now lowering that to a range of 8,000 to 8,500 vehicles. CapEx spend, they're being a little more judicious with their CapEx spend, going to a range of 1 billion to 1.1 billion for the year. Previously, they said 1.1 to 1.3 billion. Just got off the phone with Peter Rawlinson, CEO of Lucid. He says he considers this cut in production a judicious move, a prudent move, as they try to align their deliveries with some challenging conditions, but they believe that they can use this as a base and to grow from here. He told me we've got some work to do. We need to be prudent about preserving our capital. So again, Lucid cutting its full year production guidance to a range of 8,000 to 8,500 vehicles. Previously, they planned to build 10,000 vehicles. Morgan, back to you.
All right, Phil, thank you. Shares are down 3.5% right now. It's a tale of two
Complete
automakers,
disaster.
EV automakers. Adam Christofouli,
Complete
still
disaster.
with us. A lot to digest there, Adam. So I will start with some of the earnings that...
I mean, the biggest question is Lucid going bankrupt? I think there's a pretty decent probability Lucid goes bankrupt. I'm not going to bet on it, but it's not looking very good.
The fact that they posted a loss and a decline in monthly active users. I could go through the list here. Your thoughts on what we're getting this afternoon?
Yeah, I think the EV industry is at a very interesting inflection point right now. You've heard from pretty much all the OEMs, so these are the last two OEMs to really report numbers. And
Hood's down to 8. Hood's down to 8
across the board, and the entire industry seems to be retrenching a little bit as far as production capacity. Sales haven't been
Toast is getting toasted.
I think some people have been hoping. So it looks like you have a bifurcation of these two companies. So Rivian is coming through this downturn a little bit better, whereas Lucid is struggling a bit more, cutting production by a meaningful amount for the full year. So
yeah, it's a difference between one company has their products together, which is Rivian on the SUV front end on the truck part, versus Lucid's trying to sell these super, what they think is high-end cars that are trying to compete with the Model S, and you don't want to compete there, man. And so Lucid's just struggling like it's nobody's business. And also Lucid just doesn't, like, people outside the stock market don't even know what the heck Lucid is.
Yeah, Morgan, it looks like we're looking at revenues right in line with the consensus expectations of
eBay moving down.
$1.5 billion. EPS comes in with a slight beat here of $1.03, just a slight beat. They were expecting $1 a share. A couple interesting items of note here. First-party advertising products. This is promoted listings. They're saying that that's up 39%. It delivered $345 million. Also, the company bought back 651 million shares of common stock and declared a 25-cent dividend that's payable in December and a strong full-year outlook. There you can see the stock is down 4%. The operating expense and the margins for the operating expenses coming under pressure here.
Okay, Robinhood's investor relations. We got a lot of these earnings to look at here. Corsair reported. Lucid's a disaster. I don't even know if it's worth looking at. We're going to look at Dutch Bro's earnings in a little bit as well. I want to see in-depth on Dutch Bro earnings. So the Hood had transaction-based revenues are actually down 11% year over year. Net interest revenues are tearing it up for the company right now, right? Up 96% year over year. Other revenues up 24%. Total net revenue is up 29%, but it's being carried by interest revenue right now. right? Technology and development was up 9%. Operations down 37%. Okay, that's impressive. Marketing was up 47%, so they're spending way more on marketing for the hood. General and administrative was down 1%. Good, keeping that in check. Income before or loss before income taxes, so down 57%. So their loss before income taxes is coming down. That's good news, but it is still a loss of $75 million. It's down from $174 million, so they're making good progress, but there's still more to be made up there, right? Net loss for the company was down substantially on a year-over-year basis, down to $85 million loss for Robinhood, but it's still $85 million of $175 million. That's a big loss there, right? Now, one thing I did see was good is the Hood's got a pretty dang good balance sheet, right? They got a lot of cash around, nearly $5 billion of cash. They have total stockholder equity of roughly $6.5 billion. So the Hood's got a good balance sheet, but their income statement is still not in the best place, man. It's not in the best place at all. All right, so Dutch Bros opened 39 new system-wide shops in Q3, recorded revenue of $265 million. That's a 33% increase year over year. I do believe that beat analyst expectations, if I recall, because weren't analysts at 31% growth or something like that? I looked earlier. CEO says, by all accounts, Q3 was a fantastic quarter, and we are extremely pleased with our unit openings. Same shop sales, revenue, and profitability results. I'm very proud of the team for their accomplishments. I'm encouraged by the strength of the underlying business as we execute on our plan. In Q3, we opened 39 shops system-wide and entered into 2 new states, Alabama and Kentucky. Company-operated same shop sales increased 2.8%. I don't know, guys. I think that's a little disappointing. I mean, when you're in an inflationary environment where prices are going up, it seems like pretty much everything's gone up 5-10% over the past year or two. I mean, same-store sales up a minimum. Same-store sales only up 2.8%. I would, if I owned Dutch Bro stock, I'd be disappointed in that number. I would be. I'd be disappointed in that number. Not impressive at all. Company-operated shops revenue increased 36.3%. Okay, that's good. Company-operated gross profit was $57 million compared to $34 million. That's great. They're making good progress on their gross profit from company-owned stores. Company-operated shop contribution, a non-GAAP financial measure, grew 65% to $73 million. Selling, general, and administrative, $50.5 million. Net income was $13 million as compared to $1.6 million, so good progress on the bottom line for Dutch here. Okay, a big issue I see for Dutch Bros is just the problem with Dutch Bros, guys, is they're too damn busy. Okay, and their lines take a long time to go through, and this is something I've definitely experienced. My hair is crazy today. I think it's that wind outside. This is something I've definitely experienced. There's been several times I've been like, oh, I'm going to go to Dutch Bros, and then I see the line, and I'm like, hell no. I don't have 30 minutes to waste in that freaking line, because I know that's how long it's going to take for me to get through the line. It's 30 minutes. Minimum 20 minutes, especially if it's busy. Could be up to 35 or 40 minutes. So what I've just seen a lot of times, either in Arizona or Vegas, is just the lines take too damn long to get through. And a lot of people just, some people are obviously like, I don't care, I'll spend 25 minutes here in line. But a lot of people just aren't willing to do that. And so I bet you I can't be the only person in the world that, sees that line sometimes like, oh, I'm good. I don't really need that coffee drink that bad. There's got to be other me's out there that see that line sometime. They're like, I don't either have that sort of time to be in line, because some people are on, if you got to get to work, you only have a certain amount of time to get to work, right? If you got to get home or you got to pick your kid up or something like that, like sometimes I'm sure I'm not the only person that sees that line sometimes like, dude, I'm not freaking waiting in that line, for a coffee drink for 30 minutes. Like, it's just too much. So I think that is something that hurts Dutch. And they try some things to make the line go a little faster, where they'll come out to your car, and, a lot of times they'll have you put in your order ahead of time. But still, it seems like, I'll just be honest with you guys, it seems like a lot of times they're just still not moving nearly fast enough, and that line's taking too damn long to get through. So it's usually the longest line that takes the longest time to get through, to be honest. So anyways, I just think that's something that probably holds back Dutch overall. All right, so, 16.5% revenue growth? Okay. Corsair, net revenues $363 million compared to $611 million in the same quarter last year. That's an increase of 16.5%. Okay. Gaming components and systems segment revenue came in at $272 million compared to $214 million in the third quarter of 2022. Wow, big pickup. Gamer and creator peripherals, which is usually kind of like the way I think about that is, sometimes smaller dollar amounts. It is a strength for Corsair, but it's not their strongest area. But anyways, gamer and creator peripherals, $90.4 million versus $96 million. So if there's a segment I'd rather see down, it's definitely gamer and creator peripherals. So, the fact that gaming components and systems is up that substantially, that bodes pretty well for Corsair here. So overall, it's a pretty decent earnings report. I don't think it's great. I think there's a lot of progress being made with Corsair, and I think the story is definitely shaping up to be a lot healthier story in 2024. So that's a good news. But, they still got progress to make, especially on the bottom line. And it's also good to hear the creator peripherals and gamers kind of segment is what it sounds like is kind of like troughed, and if anything, growing. So that's good. I'll say that. That's good. That's something I like to hear there. So what's their debt levels looking like? Long-term debt at about $210 million for Corsair, and they're sitting on cash and restricted cash of about $147 million. Decent. We gotta get that. Corsair, in my opinion, should be a company that's profitable every single quarter. So that's the only thing I'm kind of looking at. And I'm like, I want to see Corsair be profitable every single quarter. Upwork's looking decent. I'll give them that. I certainly don't think it's the most exciting story in the world, but yeah, Upwork's looking decent. Especially given how much that stock's come down, the valuation the company currently has on it. So I'm not going to go out there and buy it tomorrow, though. I can tell you that. There's too many other opportunities out there. So, yeah, to kind of recap these earnings here. So Corsair was decent. They're definitely making steps in the right direction. And I'm happy to see that. They got some more work to do on the bottom line, but they're definitely moving everything in the right direction. Rivian, obviously they're still losing a fortune, right? But they continue to make progress. I think they're, given the fact that they're a huge money loser, I think they're executing decent. Lucid, complete disaster. Lucid is. Robinhood, disappointing quarter for Robinhood. Very disappointing quarter. They should have not come in with that bad a number. And I'm happy I didn't do my gamble. Very happy I didn't do my gamble because that money would have been long gone. Dutch Bros, I thought those earnings were decent, but I wasn't that impressed by companies' same-store sales only being up a little over 2%. Was it 2.8% or whatever? So I thought their earnings were decent. Toast got toasted. I just think a lot of people don't want to own that stock. Overall, that wraps up for today. We got a busy day of earnings tomorrow. Another busy day of earnings tomorrow. Also, it'll be interesting to get a follow-up on all these stocks that reported and what actually happens with their stock prices tomorrow, right? But in terms of tomorrow, Disney, all eyes are going to be on Disney, right? Affirm's a huge one in the fintech space. We'll see what that one reports. It's not. I can tell you after the upstart earnings, if I owned a Affirm stock, I'd be shaking. A little worrisome. Space is usually a huge mover. Twilio's reporting. I think we got a few other stocks that aren't on this earnings whispers earnings thingy here that should be reporting. That should be very interesting as well. Thursday, I'm looking super forward to with Trade Desk and Winning Resorts. That one should be really, really interesting. And Unity should be as well. Plus, we get two Jack Jackson players reporting Thursday after the bell. Can it be an Aurora? So, yeah, eBay numbers, I looked quickly at the eBay numbers. It looked boring as heck, which is to be expected. eBay benefits from, eBay benefits a few ways, but one way eBay benefits is when people have too much money. I just bottom line, because when people have too much money, they buy a lot of collectibles, Pokemon cards, all different types of stuff on a service like eBay. That's their, like if you're going to buy, collectibles, right? When you're only usually buying collectibles if you have too much money, let's call it what it is. You're going to usually go to eBay for a lot of that, and so they benefit. But yeah, overall, Anyways, guys, much love as always. Appreciate you joining me. I'm going to start preparing a video for the main channel, which is going to be interesting because we got some stuff to talk about in that one. So much love as always, and have a great day.